It's another phenomenal day for Hims and Hers investors today. Shares are up 23% as I'm recording. And the news that broke this morning was that the new FDA chief may have some ties that could be helpful to Hims and Hers. So I want to get into exactly who that is, what those ties look like. This is still a pretty speculative move, but we are seeing an environment from a policy perspective, and the people that President Trump or President-elect Trump are putting in place could be beneficial to businesses like Hims and Hers. So I'll dig into that today. My name's Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's start with that stock move. And this is Google Finance. You can see shares are up almost 23% right now, past $31 per share. So hit their 52-week high, actually are trading at an all-time high today. So phenomenal momentum. This is what's crazy. $5.78 was about the low a little over a year ago. So the stock's been absolutely on fire since then. Here's the news from NBC. You can see that Trump has picked Dr. Marty Makary, who is a Johns Hopkins surgeon, has also been interviewed a bunch of times on Fox News. Not a real surprising pick, but that's going to be the new FDA chief, assuming that he gets confirmed. So why is that such a big deal for Hims and Hers specifically? This is Sesame, which is still a private company, not a publicly traded company. But if you look at their leadership team, look at this person right here. Dr. Marty Makary is the chief medical officer and has been involved in this company. What does Sesame do exactly? They have a fairly similar model to Hims and Hers. They are a telehealth company, so you can do telehealth, but you can get weight loss, video, prescription refill, ED, some of the things that Hims and Hers is doing, not quite as focused. And it seems like things like urgent care are going to be a little bit bigger piece of their business. But I want to zoom in on weight loss specifically. This is their weight loss page. And what I want you to focus on is right here in the middle, medications with no price markup, high quality, pre-measured, compounded semaglutide. Semaglutide just happens to be the GLP-1 that Hims and Hers is making. That is also the one that is supposedly going to go off shortage relatively soon. That's what has been a ton of conversations on Hims and Hers conference calls. But the compounding business is something that Sesame is making and producing. So the exact same thing that the market has been obsessed with Hims and Hers is something that the new FDA chief is also at least involved in a company that's doing something similar. So that's the tie here. What exactly does that mean for Hims and Hers? There's no real clear answer to that, but it may just be the case that this gives the new administration a little bit more predisposition to have some of these workarounds, like compounding for some of these very, very high cost medications that are very, very popular and also meet some of the goals of trying to make people a little bit healthier. So that's the tie there. But I also want to bring this around to why Hims and Hers stock is moving as much as it is, because this is something I think has been coming for a little while, and it's kind of like a spring that's been compressed and it's just ready to unload. And that unloading is happening right now. That's why I think the stock is moving so much. So let's dig into some of those numbers. This first chart shows in the light tan color, the Hims and Hers color, the price to sales multiple for Hims and Hers. This is the multiple that I go back to with this company. If you're going to evaluate a company that hasn't typically been profitable, it's really hard to look at a price to earnings multiple to try to get some sort of valuation metric. But if you can look at a price to sales multiple, you can sort of get an idea what you're paying for the business if they do get to the point where they're generating profitability. So you can kind of approximate, well, if they could get to a 10% net income margin at the current revenue rate, this is what I would be paying for the stock. So Hims and Hers right now trading for almost 4.5 times sales. But what does that look like historically? So that's about where the company has traded historically. But the low point for Hims and Hers was at September 2023, got down to about 1.5 times sales. Even earlier this year, it was about 2.6 times sales. That was when I started covering the company and started acquiring shares in Hims and Hers. And that was when revenue started to kind of tick lower. The revenue growth rate was ticking lower. You went from 100% growth rate year over year to between 40 and 50% growth rate year over year. That's still a phenomenal growth rate, but it's a slower growth rate. So maybe that deserves a little bit lower multiple than you would have previously. But what happened since then? In the third quarter, revenue growth bumped up to 77.1%, and management is expecting that growth rate to be over 90% in the fourth quarter of 2024. So now you start to think that growth rate isn't slowing, it's actually accelerating. So now the multiple should be higher. It's taken a little while for that to kick in for the stock, but that's what we're seeing with Hims and Hers right now, is that investors are just saying, hey, if this is going to be a company that's going to sustainably grow at nearly 100%, this is probably worth more than 2 or 3 times earnings, especially if now that we've gotten to the point where Hims and Hers is profitable. And that's the next key for the company. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. This is a look at Hims and Hers quarterly revenue. So just a single quarter in each one of these columns. And that's that light color on the left side. In the middle, you see operating income. The reason that I included operating income and not just net income is you can see that in the most recent quarter, the third quarter of 2024, net income benefited from a tax benefit. So that kind of jumps that net income number. That's not really what the normalized number would be. You'd be more closer to $20 million or so in net income, but that's still about a 5% net income margin. Not a bad margin given the growth rate that Hims and Hers is at right now. Like I said, 77% last quarter, 90% next quarter. So everything seems to be going right. But why? What was holding the stock back? Why was there so much volatility, particularly after earnings? And why has that momentum picked up just over the past week? That comes down to the regulatory certainty in the future, and that certainty around GLP-1 specifically. Over the past year, Hims and Hers has acquired pharmacies that would allow them to make most of their GLP-1s and most of their compounded products in-house. So that should be not only a cost advantage, but also a capability advantage over a lot of their competitors. They've also expanded into products like GLP-1. So if that product gets shut off by the FDA because it's now no longer on shortage, that would be a negative for Hims and Hers. And so that was the risk that investors were thinking about. So now a new administration comes in, maybe that new administration is a little bit more prone to allow these compounded treatments to be a little bit more readily accessible and available to help lower the cost of even those branded treatments long term. That's at least what the market is thinking about. Now, like I said, we don't know exactly what the impact is going to be. But if there is some sort of positive way that the FDA is treating compounded products, that would be something that the new FDA chief was actually involved in, making those kinds of decisions at Sesame. And if that's the person who's running the FDA, wouldn't a company that has a similar business model like Hims and Hers benefit from that? I think that's really the crux of what's going on today. So there's a difference between fundamentals and what's going on at the company. All that is going really well at Hims and Hers. But the short-term movement, the reason that shares are up 23% today is because of speculation that this momentum that we've seen over the last few quarters on the revenue side and then also on the margin side is going to continue for Hims and Hers because the FDA is going to be a little bit more favorable than it was previously. Now, all of that is to be seen, but hopefully that puts some context into exactly what's going on. Been an extremely volatile week, but this is why I buy companies that I think have a lot of upside that isn't priced into the stock currently. You never know when that upside is going to materialize or when the market is going to change its tune. But buying Hims and Hers at 2 or 3 times sales, I thought was really good price for the growth rate that you had with the company. Now that growth rate is picking up. The price to sales multiple is picking up. That could go much, much higher. I wouldn't be shocked if Hims and Hers reports a 90% growth quarter if this is a stock that's trading for 6, 8, 10 times sales. That's not an unreasonable price given that growth rate. There are plenty of companies out there that have the operating leverage that Hims and Hers does that are trading at those kinds of multiples. So I'm definitely staying long Hims and Hers. I think there's a lot of potential with the company. And until we see real fundamental business changes, I think there's a lot to like about the stock as well. But let me know what you think about the reaction to the new potential FDA chief, what that means for Hims and Hers in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.